keep communication flowing, helps ensure that we here are making sound decisions, informed decisions, and across the board, making a great team. So, Miles, thank you so much for doing this. I will be tuning in so I can learn a little something nuggets that you got to share. And I appreciate you leading the meetup this month.
Hey, Alicia, thank you so much for that intro. Like Alicia mentioned, my name is Miles Hill. I'm the team lead and acquisition specialist over at Excite Capital. I've been with the team for a little bit over, a little under 3 years. It'll be 3 years at the end of this summer. And I'm very excited to hop into this. So as she mentioned, we're going to be talking about finding apartment deals, funding apartment deals, and then equally as important, managing apartment deals. So without further ado, let's hop into the agenda for tonight. All right. So once again, this is going to be like a summary of some of the topics that we're going to be talking about. Firstly, we're going to just mention why apartments, right? Why is this asset class so compelling when it comes to some investors? We're going to be talking about some of our deal finding strategies that Excite Capital deploys on a daily basis, weekly basis. And if you could break down this industry, there's so many different parts of this industry, but if you could just break it down into 3 steps, it's finding the deal, funding the deal, and then managing the deal. So the other 2 topics are going to be capital raising techniques, and then the whole presentation in itself is going to be sort of like a case study. Our latest acquisition was Grove Park View. It's a 268 unit apartment building in Atlanta, Georgia. We just acquired it a little under 2 months ago. So as we're going through these steps, I'm going to bounce it off of Grove Park View. So, and really like unveil the curtain so y'all can see like an inside look of how Excite Capital operates. So we're going to be talking about some strategies along with tools that we use to accomplish all these things. So without further ado, let's hop into why apartments are, in my opinion, one of the greatest asset classes that we can invest in. So at the top of the list, recession resilient. What does that mean, right? In times of a lot of uncertainty, which we might be facing here later on this year, I'm not a fortune teller, but just reading the writing on the wall, there's a lot of uncertainty. If you've been following what's been going on with the economy here recently, we just reported a negative quarter when it comes to the GDP. And the definition of a recession is 2 back-to-back quarters of negative GDP. So we're halfway there, right? So let's say there is a economic downturn or recession at the later part of this year. Multifamily, this asset class, it stands to continue to do well. And then if I could just jump around to another reason why multifamily is such a powerful asset class is the growing demand. So even despite economic uncertainties or recessions, depressions, whatever you want to call it, there's a demand, especially in the United States, there is a huge demand for housing. The United States of America has a housing shortage. And to take that a step further, we have an affordability issue. So there's an affordable housing crisis as well. So if you look at the rent to own ratio, it's going to continue to expand. And you're seeing it in a lot of countries around the world. And America is going to be following it as well. People, especially these newer generations, if they choose not to own, it might be for a couple reasons. One reason might be because they can't own. So they're going to have to rent. A couple other reasons that we have on screen is just the cash flow at scale. If you're buying a 100-unit apartment, you can utilize economies of scale in that building itself versus if you had 100 single-family houses. And then there's so many benefits. I could go on, but in the interest of time, I'll just quickly mention the tax advantages. Some of the strategies that we use here at Excite Capital is a cost segregation study. And for those who may not know, a cost segregation study is a way to take depreciation and really take it to the next level. So we run these studies as soon as we acquire a property, where we'll have an expert go through every single thing. Besides the land that it sits on, everything else experiences wear and tear, right? HVAC systems have wear and tear, roofing, plumbing, all the different aspects of a multifamily asset experiences wear and tear. Therefore, we can use depreciation for it. And through the use of a cost segregation study, we can take that depreciation benefits to the next level. I'm very bullish when it comes to multifamily, but on the other side of that coin, just for those who are in the educational stage, some reasons not to invest in multifamily. I want to just throw that out there to be completely transparent. Is it's not the most liquid investment, and what I mean by that is I can go invest in Apple stock today. Things go my way or don't go my way, I can sell it tomorrow. With these multifamily assets, they're illiquid in a way. But if you're here to build long-term wealth, it is the perfect asset for you because um, if your plan is to, like, once again, buy something today with the intent to ride it out for the next few years, multifamily is the asset. And hey, Jeremy, I see you. You're joining me on camera. How you doing today? All right, give me a second, y'all. Hey, can someone drop in the chat? I hope I'm just not talking to a blank screen. Can y'all see my presentation right now?
Yes.
Okay, beautiful, beautiful, beautiful. All right. So this next slide, and let me just exit some of this stuff out so I can see. All right. So this is, once again, if you break down this industry into 3 topics, it's finding the deal, funding the deal, and then managing the deal. So the first step is going to be finding the apartment opportunities. All right. The number one way that we've acquired all of our assets is through broker relationships. And I'm going to definitely talk about it on the next slide. I have a whole slide based on this, but it's building relationships and genuine ones at that, but not just any relationship with anyone, right? You want to identify the top brokers in your ideal market. And the reason why is because you can spend a lot of time on the phone with a lot of different people, but if they're not getting deals to the finish line, not saying it's a waste of a conversation, but you could also be using that time and that energy to be focusing on some of the top brokers who are getting transactions done. Some other ways you can find deals is building relationships direct to seller. These off-market deals and the data-driven targeting. I have a slide based off this. We leverage CoStar for some of these opportunities, but I really want to spend some time on the broker relationships because that's how we found Grove Park View. And once again, that's how we found all of the deals. So just to take a step back, Excite Capital has acquired over $217 million worth of assets. All $217 million worth of those properties were through a relationship with someone else. All right. And now, if you like, take a screenshot of this slide right here. Because when I was first doing research about apartments, and this is predating before I even joined Excite Capital, when I was doing research on multifamily, the only thing that came up was CoStar maybe, LoopNet, and Crexy. If you're relying on LoopNet and Crexy to find an apartment deal, I'm just going to be completely transparent. It's not a deal. Thousands of people have put eyes on these assets if they're listed on Crexy or LoopNet. So if thousands of people are passing on that opportunity, it's not an opportunity for you, right? However, once again, if we just go through this list real quick, we have Awasom Young, Barcadia, Capstone, CBRE, Colliers, Cushman and Wakefield, D10, GRIA, Graysdale. Y'all see it on my screen. The Institutional Property Advisors, JBM Institution. All of these are top brokerage firms. Now, some of these might not be in every single market, right? For instance, IPA, they're big in Texas, they're big in Florida. One of our target markets is the Carolinas. I can't go to the IPA website and find a North Carolina opportunity. However, one strategy that I want everyone to if you're taking notes, take this down. Go to CoStarPowerBrokers.com. You can just Google it. Once you're on there, hit the latest year and then go to award winners. Type in whatever target market, Atlanta, Charlotte, whatever your target market is, and then scroll down to the very bottom of the screen, and you're going to see top sales brokers and top sales firms. These are who you want to start building relationships with. These are the people that are going to be able to bring the best opportunities to you. Another semi active, but I would consider it passive way to find a deal is to go on these websites. So I just listed off the top row. The bottom row, Marcus and Millichap, Matthews, REI Services, Newmark, Northmark, SVN, and Walker and Dunlop. These are just some of the brokerage firms that here we at Excite Capital are building relationships with. If you look on CoStar Power Brokers, you're going to see all of these firms depending on what market that you go to. So just a quick note, Commercial real estate and real estate investing in general is a relationship-based business, okay? You have to start building genuine relationships with the right people. So that goes into identifying who are the top sales brokers in a market, building a relationship with not only them, but their team, so you can get on their pre-market list. So whenever they have an opportunity, you're first on mind, top on mind, and they're sending it to you before thousands of other people have an opportunity to review that deal. Just to give you an example of like a genuine relationship, just this last Friday, I called a Cushman and Wakefield broker in one of our target markets. For the first 10 minutes of our conversation, we didn't even talk real estate. He's having his third born child, and I thought this was just so interesting. His first one's a boy, second one's a girl. For the third one, they're just playing Russian roulette. They're gonna find out on the delivery table if it's a boy or a girl. And like in today's age, with all the gender reveal parties, I thought that was just the coolest thing. So I have a daughter, I have a son, so we were able to connect on a deeper level, right? And like I mentioned, for the first 10 minutes of our conversation, not once did we talk about this deal that we're underwriting or this deal that we submitted an offer on. We're talking about, I'm connecting with him on a personal basis. So whenever he has an opportunity, he's thinking of Miles, he's thinking of Tenny, he's thinking of Excite Capital to be able to review that deal. Because I'm telling you, even if you have a higher offer, let's say we submit an offer at 25 million. Someone that doesn't have a relationship with a broker submits it at 30 million, so $5 million more. But that broker knows that Excite Capital can get it to the finish line. They're gonna present all offers to the seller. I mean, it's their duty as a real estate broker to do that. However, they're also gonna be like, hey, I know Excite Capital. I've been doing deals with them for 6 years now. If you award the deal to these gentlemen, I know, or to this team, I know that they're gonna be able to get it done. So despite this offer for 30 million, let's go with this one for 25 million. And I'm telling you guys, based off a relationship, you can get a deal done. So let's start building genuine relationships with the top sales brokers in every market. And I apologize, I got all these things popping up. I hope my computer doesn't crash. I keep getting this sign saying there's
Miles's computer did crash, so we're going to give him a couple seconds and a minute or two to get back online. Let's see here. And fella, if you could watch for him coming back in the room here. All right.
I'm back. Can you hear me, Alicia?
Yes, I got you.
Okay, I'm giving too much information out, y'all. That's why my computer crashed. But in all honesty, I have so many tabs. I was reviewing some deals over the weekend and then today, so I have so many tabs up. I just closed this window out, so hopefully it doesn't crash on us.
Miles,
again.
I felt like a newscaster. Like we lost him. We're gonna get him. We're gonna get him back. So go ahead. I'll let you continue.
I'm back and I'm better. Can we just drop in the chat if you can see my screen? It should be on the tools we use to find deals. Can we see this screen? I see someone is typing right now.
Yep, we can see you.
Beautiful. All right, let's hop right back into it, guys. Okay, so let's say you built a relationship with one of the top brokers and they send you an opportunity. How do you know if it's an opportunity or not? So here at Excite Capital, we use a screening method where we want to make sure we're investing in growing markets. How do I ensure that the deal that I've been sent is in a growing market? So these are just some of the tools that we use on our acquisition side of things. Starting at the left, we have REI Indicator. REI Indicator is one of my favorite websites because by just inserting the address, it can tell me what class neighborhood it's in. At Excite Capital, we do not invest in Class D neighborhoods. And one reason why is because Class D neighborhoods are associated with high crime rates, low school ratings, low medium household incomes. Right there, that's enough red flags for us to just pass on that opportunity. DataUSA.io, VestMaps, and then Neighborhood Scout, they all do similar things. If you have the address of your subject property, you can throw it into one of these resource tools, and they'll tell you what the median household income is in an area. They can tell you what the school ratings are in an area, the crime rating. They can even tell you like the population growth in the past and forecasted population growth. So I mentioned Class D neighborhoods are something that is a red flag for Exide Capital, and we're going to pass on. Also, if the median household income is lower than $35,000 in a particular submarket, we're going to pass on that opportunity. If the crime rating is too high, we're going to pass on that opportunity. Because one thing you'll notice that once you really get into the weeds and you're reviewing a lot of opportunities is, especially in like these Class D neighborhoods, for an example, you'll see in an apartment, it falls in a Class D neighborhood. You're also going to see that the crime rating is going to be high, the median household income is going to be low. And then if you look into the deal, how it's operating, I guarantee you that deal is going to have higher delinquency, higher vacancy most likely than a deal across town in a better neighborhood. All right. So once again, if an opportunity lands in a Class D neighborhood, I could use REI indicator along with some of these other resource tools to be able to screen through these opportunities to ensure that Exide Capital is bringing in the best opportunities to market. And then last but not least is CoStar. CoStar is one of my favorite tools. It's in fact is very powerful, and we're just like scratching the tip of the iceberg when it comes to everything that CoStar has available. So if you remember a couple of slides ago, we talked about the off-market opportunities and then the data-driven approaches to finding these opportunities. Let me just break down some of the things that you can use if you had CoStar, and there's other tools out there. CoStar is a little expensive. We have PropStream is one. There's some other tools, right? If CoStar is out of your current budget, there's some other ways that we can go about doing what I'm about to describe. So let's say you have a search engine like a CoStar. You can type in your subject property, or I'm saying, let's just say your subject market. And you always want to find out the supply and demand, right? Because supply and demand, it moves any market. If there's too much supply, rents go down. If there's a lot of demand, rents go up. So hey, I'm back, y'all. My apologies once again. And I see in the chat, Carrington, it's not only you; it's on me. I had too much going on in the background, and my computer keeps crashing on me. So my apologies. What I was saying though, and man, this is very key, and I want everyone to be taking notes, especially all the active investors out there. Supply and demand moves any market, right? You can use tools like CoStar um, to be able to find out what submarkets in your target market are better than others. So for instance, in 2024, we saw millions of units under construction over the whole country, right? What if there was a way to segment what submarkets have the least amount of supply coming online? You can do that with CoStar. Imagine on the other side, like the demand side, imagine you want to avoid any submarket with negative rent growth. You can put in that filter, and then now you're filtering out a market that has limited supply, demand. And to take this a step further, y'all, I want to take a few moments just to say, anytime there's a lot of uncertainty, if we just flip our mindset, someone could see it as distress, right? But distress brings opportunity. So when there's a lot of uncertainty, the window of opportunity is just explodes open. What we're going to see over the next 2 years is a lot of deals coming into market with upcoming loan maturities. So imagine that you put in these filters to see the submarket with limited supply, high demand, and you find an asset with an upcoming loan maturity. This is a seller or an apartment operator who has to sell. This is an outstanding opportunity, right? So you have a distressed seller, you have a growing market. Those two together is an incredible opportunity. Um, and yes, let's say we built the relationship with the broker, or we found the off-market opportunity. We've been presented this amazing opportunity. We screened it using the tools that we have on our screen. We submit our offer gets accepted. So what's next? So the next thing you're going to want to do is your due diligence, right? Obviously, we did a little due diligence prior to being awarded this opportunity, but this version of due diligence is where not only yourself, but your property management team is going to be going on site to doing a lease audit. So you're verifying all the income that comes into the property, right? As an apartment operator, we're in the business of buying businesses, right? An apartment is essentially a business. And how do you value businesses? By the amount of income that they generate. So you always want to trust but verify that the documents that the seller has provided you are accurate. And with that, you can conduct that with a lease audit. With a property inspection, here at Excite Capital, we do a thorough job at due diligence. If the property is 268 units, we put eyes, we walk every single unit. We want to ensure that what we are about to take over is what has been presented to us. So from the roofs to the foundation and everything in between, we have experts to come out and give us an exact quote on what it's going to be to operate this asset. So before we do due diligence, we make a lot of projections, we make a lot of assumptions. After due diligence, we can sharpen up our pencil and we can really refine our numbers. A couple of other things that we have on our screen is just the management insights. We're going to have our property manager on site to do the due diligence. So after we're done, we're going to obviously get their feedback. And one thing I want to say is, imagine that you're taking over an asset, right? You already have your property management team, but there's the current property managers. They have invaluable insight. They've been managing this asset for X amount of years, right? Always ask them, hey, what would you have done differently? Could you have improved on? What are some of the most common complaints that you get from residents? This is an outstanding opportunity to really get great insight on what opportunity that you're about to purchase. And then a part two of the due diligence process. So mind you, let's say the asset is 268 units. We're walking those 268 units, right? Once we make it back home, let me sit to the very bottom of this, y'all. So the comps analysis, when we're on site, so let's say I live in Tennessee right now, and then Carrington, I see your question in the chat. Thank you so much. We're gonna answer all of those at the very end. Hey, if you're joining from YouTube, LinkedIn, or here on Click Meetings, if you have any questions, I will address all of them. Feel free to drop them in the chat, and then we'll definitely get to them. But back to the comps analysis. So I live in Tennessee, and some of our target markets are Atlanta or the Carolinas, and it would require me to drive. So if I've driven to Atlanta and I'm on site, one thing that I'm going to be doing while we're doing due diligence is touring some of the other comparables or comps. So if we have a 268 unit apartment, Class B, I'm going to be looking at other similar Class B properties in the area. I'm going to tour some of the units. I'm going to see some of their finishes. I'm going to see what they're charging in rent, what pet fees they have, any amenities. And what I'm going to do is compare our asset to all of these comparables. So let's say
Okay, it looks like we lost Miles again, but he should be rejoining here shortly. And apologies for the disruptions, guys. Thanks so much for bearing with us.
Okay, I'm back for the third time, y'all. Let's cross our fingers that this is the last time the computer crashes on us. Back to the due diligence part two, and once again, I can only imagine how it is on the audience side of this. So my apologies. There's a lot of value in this presentation. Bear with all these interruptions, y'all, because I'm telling you, I'm unveiling the curtains. I'm showing y'all inside of how Excite Capital operates. So we're on site doing due diligence. We're going to be looking at all the comparable properties. Along with that, we're just making sure our business plan is aligned with what we're being presented. You always want to do an exit scenario, right? And with that is an exit cap sensitivity test. The cap rate is one of the most valuable data points that you can leverage in multifamily real estate investing, right? So a 0.01 difference in a cap rate can significantly change your purchase price or your sell price. So we always do a exit cap sensitivity test along with our debt assumptions, right? So for Grove Park View, we assumed a Fannie Mae loan, but say you're going out there and shopping interest rates, you want to build a relationship with the top brokers, debt brokers in this case, and see who's offering the best rates. All right. And I'm going to continue to move on. My apologies for all of the interruptions. I see we still have a lot of people still sticking with me, so I thank you so much, y'all. Okay, let me just clear out all these things. Okay, so the first part of this presentation was about finding the opportunities. So I just want to take a few moments to tell you all of the work that went into finding Grove Park View. So just to give you some insight on Excite Capital, we closed, besides Grove Park View, our last acquisition. It was 101 Elwood, and we closed it in December of 2022. After closing that property, we screened over 2,341 opportunities. And this is not like we underwrite 2,000 deals, but this is, hey, I got sent an opportunity, or I was on a brokerage firm's website and I found one that fit our buy box. And maybe the median household income was too low, or the school ratings and crime ratings were just off, or it was in a Class D neighborhood. We screened thousands of opportunities to find this one. It's like a needle in a haystack, right? During that process, we submitted over 112 offers. And then for some offers, some sellers want to make sure that a key principal towards the deal before they have the best and final round. And like essentially what a best and final round is, let's say you submit an offer, the seller is going to take the top 2 to 5 offers, and he's going to interview those individuals. So based off that process, we toured over 48 apartment opportunities. So that's all the work that went into finding Grove Park View. So the next step, equally as important. All 3 of these steps are equally as important. You can find an opportunity, but if you can't fund it, what's the point? You can find and fund an opportunity, but if you can't properly manage it, what's the point? So step 2 is going to be about funding the deal. So this is just a synopsis of Grove Park View. We purchased this asset for $49 million. One great thing about this property is just a couple years back, it was valued over at $60 million. So we're buying it with some intrinsic value already there, right? We raised over $23 million for this asset. In the debt financing, if you just see on the bottom, we assumed a Fannie Mae loan at 4.74%, and it came out to be the senior and subordinate loan was around $31.59 million. So this is a great opportunity to talk about the debt and equity, right? Those two come together, and one way to visualize the debt and equity is through a capital stack. So this slide right here just breaks it down, like risk at the top, less risk at the bottom. The next slide we'll get to here in a moment, it'll be a more traditional capital stack, not like this pyramid, but you'll see it here momentarily. But the capital stack, it provides a clear visual representation of how real estate deals are funded. So once again, it's mixing in the debt and the equity. And y'all, I just have an idea. I'm going to come off camera. I'm obviously still here with you all. As long as you can hear my voice, I'm still here with you. Maybe this will prevent it from crashing. So let's see if this helps. So starting at the very bottom, because I'm going to start at the bottom and work our way up, is the senior debt. So for Grove Park View, in instance, this is like that Fannie Mae loan that we assumed. So this is going to be like the first position, and it's going to have the lowest risk and return. As you work your way up the capital stack, the risk goes up. However, the returns go up, right? So there's no returns without risk, and vice versa. Mezzanine debt has a higher interest rate, and it's in the subordinate position. So they're going to be on top of the senior debt. And then the LP equity, this is like receives preferred returns plus profit share, depending on how the deal is broken down. And then last but not least, preferred equity. So they're going to receive a higher return, moderate risk because they're the last on the capital stack. And however, they're not going to partake in the profit share. So this is just the information here. But let me show you an example of Grove Park View's capital stack to really drive this point home. So once again, the capital stack helps investors visualize their position in the deal structure. It also shows the associated risk level with wherever you put your position in the stack and the potential returns, right? So once again, at the very bottom of the capital stack is going to be your senior debt. So this is going to be that Fannie Mae and our subordinate loan that we put on this property. Next, we have the preferred equity. Then we have Class A investors and then Class B and C investors. As you work your way up the capital stack, once again, the risk gets higher. However, the returns are higher as well. Okay. And now this second step is about funding the deal, right? So we talked about the debt. Now let's talk about the equity. In this case, in any case, you have to raise the equity, right? So if I could break it down, let's say I was buying a single family house. I'm going to go out there and get the loan, right? That loan is considered the debt. My closing costs, all that stuff is the equity that I had to bring in to be able to take down this opportunity. So for the equity part, I just want to go over some of the strategies that Excite Capital uses to raise capital. So early engagement. Before I hop into that part, I just want to mention, if you are actively raising for any opportunity, let's say you have an opportunity or you don't. If you are an apartment operator, you are always raising capital. You're always building relationships. So there's this common myth that like, hey, if you have a great opportunity, if you have a great deal, the money's going to find its way to it. And yes, that's true in a way. However, you never want to put yourself in a situation where you're taking on more than you can handle. So you always want to make sure you have that lined up. You have the capital, you have the equity lined up. So that early engagement is ideal. You always want to have a webinar before you launch the deal. And this is an opportunity very similar to this this platform that we're on today. It allows you to be able to just get the information out there to your community. You always want to have targeted outreach. In anything you do, you want to narrow your focus. So if you have an ideal client, and this is just an example, focusing on a busy medical professional who's looking to diversify. And then for you, it might be different, but the founders of our company, 2 of them are healthcare providers. A lot of our early investors were their colleagues, their coworkers, family as well. So that's sort of our outreach is targeted to that niche, right? The busy professionals, the engineers, the lawyers, the medical professionals, those that are looking to, maybe they have a 401k that is, allocated to the stock market and they want to diversify to something else. That's our ideal client. And anything you do, you want to have clear communication, consistent communication, transparent messaging. I'm telling you all, people appreciate it. Whether things are going right or things are going wrong, if you're just being honest, they're more willing to help you out. They're more willing to, like, one, they're going to buy into your vision more, right? So you have to have that clear communication on a consistent basis. And no matter what's going on, the good, the bad, the indifferent, the ugly, you just have to be transparent. And then last but not least, the trust building. Leveraging your track record of any of your past successes. So Excite Capital, we've been around for 6 years. We've acquired 7 properties, totaling $217 million. We've raised over $30 million of capital. We haven't lost a penny of any of our investors' capital. We've succeeded and exceeded our projected returns for a deal that we exited. That is things that we can leverage to not only build trust, but to put ourselves in a situation where we can have access, right? Access to the best deals and have the community to be able to take down these opportunities. Now, this next slide is one of our top strategies that we deploy on a quarterly basis to be able to shake hands, meet and greet with some of our investors, right? And that's going to conferences, going to networking events, hosting our own networking events. So over the last couple of years, someone on this call today, y'all may have seen us at the NMA, the National Medical Association, or the AANA, AMPA, UIU. There's so many different conferences that we've identified, like, hey, our target audience, the people that we want to serve the most, if they're going to be at these conferences, we're going to show up. We're going to present this information to them. We're going to give them an opportunity that maybe they weren't exposed to. We're going to be able to shake their hands, give them hugs, share energy with them, really be able to establish that relationship. And there's no better way to establish a relationship than in person, right? Like, we're having this call virtually right now. I know that y'all could maybe hear like the passion in my voice. I wish I could come on camera right now. Y'all could see the passion on my face. But when you're in person, there's no better. Like, we're all humans on this call. We need that. We need that touch, that feel, that exchange of energy. So hosting networking events, going to conferences has been our number one strategy when it comes to building our community out and raising capital. And then once again, y'all, as we're going through this presentation, if you have any questions about how we're finding these deals, how we're funding these deals, or here in a moment how we're going to be managing these deals, drop them in the chat, and I'm definitely going to love going through those here later. But our last step, right, 3-step process, if I could break this industry down, is managing the asset. This is key, y'all. So much work goes into finding an opportunity. So much work goes into raising the capital. There's no point in doing all that work is if you're going to get a great opportunity and it slips underneath your hands. How can you prevent that from happening? The number one way is your management selection, okay? Unless you have an in-house property management firm, so you're really built out, this doesn't apply for you. But if you are hiring a third-party property management firm, how do you properly vet them? One way you can is see some of their deals that they're currently managing. Ask very open-ended questions, have them do most of the talking. This is an interview. This person is one of the greatest, I'm gonna say, allies on your team, right? Your property manager can take a bad deal and turn it great, or they can take an amazing asset and make it subpar. So you want to vet your property manager. On a weekly basis, you want to do check-ins with them. How is leasing coming along? How are the collections, renovation schedules? Go over any resident reviews that they left the last week. Is there any open, why am I drawing a blank? Work orders. So let's say like an HVAC went out. It's the middle of summer. That tenant apartment is too hot. They put a work order in on Monday. Is it solved? If it's not solved by the next Monday, then that property manager is doing something wrong. So this is an opportunity when you're having these weekly performance check-ins to making sure that your asset is being managed properly by the property manager. So as an apartment operator, it's your role to manage the manager. Along with that, if it's in your business plan to have, hey, we're going to be renovating X amount of units, how is the renovation schedule coming along? If it's taking a month to renovate a 1-bedroom, why? What's going on? This is where you can have an open-ended conversation with your property manager to see and maybe to adjust your expectations. Maybe there's a supply chain issue, and that's the reason why it's taking 30 plus days to renovate a 1-bedroom. Or maybe they need assistance. They need to hire someone. They're overworked and undermanned. Being able to sit down and look at the key performance indicators can tell you a story, right? So men lie, women lie, the numbers don't lie. The data doesn't lie. So if the data is telling you like, hey, it's taking too long to renovate these one bedrooms, that's when you can spur the conversation with your PM saying like, this is my expectation is not currently being met. What do we need to do? What resources do we need to allocate so we can realign what's currently happening to the expectations? And then that's more so like on the asset. When it comes to the investors who are investing into that asset, as a apartment operator, you always want to have the communication. That line of communication always has to be open. Here at Excite Capital, we send out detailed monthly reports. So towards the end of the month, we'll send out the month prior. Once we get all of the finances, all the income statements, all of the rent rolls, the age receivable reports, all of the reports that we use to make our decisions, we allow our investors to be able to see into all that. So we create a folder that they have access to, and that is that transparent communication that I was talking about a slide or two ago. If we are seeing something in our reports, our investors who are part owners of these assets also have access to these reports. So that is key. I've gotten so many like emails or phone calls from investors that were actively going through the rent roll or the T12 asking questions. And I'm just going to be completely honest with you all. I absolutely love those conversations. That tells me that investor, I mean, yes, they are a passive investor, but they're taking an active role in their passive investment. They're making sure that their investment is on track, and you always need to do that. Even if you are a passive investor, maybe you don't have the time to actively find the deal or fund the deal or manage the deal. You need to align yourself with a sponsor who is taking the time to be transparent, who is taking the time to build the relationships, who is taking the time to, once they receive that asset, they're going to take it and deliver on their projections. Okay. And just to transition, I wanted to use this as a case study. When it comes to managing Grove Park View, we've acquired this deal and now we're actively managing it. So one way I like to think of it is we're enhancing this community while executing our business plan. So our business plan was to renovate 105 units. It's going to cost us roughly $14,000 per unit. After we renovate those units, the rent premium, so this is the difference between what it was being rented prior and what is currently rented at, is called a rent premium. The rent premium, in mind you, Grove Park View has some studios all the way to 3 bedrooms. It's going to be from $200 to $400. One great thing about this asset is the business plan has already been proven. The prior owner, before they sold it to us, they renovated over 150 units. And if we analyze the rent roll, we can see that they're getting a $200 to $400 rent increase based off their renovations. So that tells us as apartment operators, if we just do similar upgrades, similar finishes, bring it those 1980s product to 2025 standards, we can charge similar rents to what the market's charging for renovated units, align with what some of our other units are already being rented for. That right there, that delta between what is currently being rented as versus what it's going to be after it's renovated, like once again, apartments are valued based off how much income they're generating. If you're increasing the rental income by that much, the value of this asset can astronomically increase. Some of the things that we're planning on to doing, once again, we're planning on renovating 104 interior units. We're just going to be bringing them up to today's standards. So we're going to be going with the LVP flooring, stainless steel appliances, all the modern finishes and fixtures that you would see, right? And if you take a look at this middle image, this is actually the clubhouse. But as you see, like you can see the recessed lighting, the modern lighting, and off to the left, you see the appliances that they used in the clubhouse. Very similar finishes in the interior units, and we'll be able to get that rent premium. Exterior improvements. So this the prior owner, once again, has done an outstanding job of maintaining that property. So there's not too much deferred maintenance. However, we identified that we are going to be replacing some roofs throughout our whole period, enhancing the landscaping. There's a pond or a lake that's right behind the asset. We plan on just clearing up some of the tree limbs that are low hanging, just so you can see access to the lake. Some of the units that are facing the lake, we're going to be clearing up some of those trees as well. So just enhancing the landscaping and refreshing the pool deck. This image to the left, as you see, the pool is very modern. There's going to be a couple of things that we're going to do. Maybe add a grill station, gazebo, pavilion type of thing, just to make this community more family oriented. Give them another reason to get out and enjoy that Georgia sun and grill and have a good time. This image to the right is the current playground. Once again, Grove Park View is 268 units. There's a lot of families that occupy these units, a lot of kids that are running around. So we have plans to not only add a dog park, upgrade the sports court, but potentially even increasing the playground size. So that's some of our plans. And once again, our business plan, if we execute it, we're going to enhance this community. All right, so what tools do we use to raise capital? What tools do we use to manage our deals? To the left, we have Monday.com. We have a lot of workspaces within Monday.com, but one thing, and I'm not sure if that's on me zooming into this. Give me a second to zoom back out. I didn't like that. Okay, Monday.com is it's just a way that we can stay task focused, right? So a lot of the things that we need to accomplish on a weekly basis, they break down, and that task in itself has multiple tasks. So Monday.com, depending on what workstation we're using, it's a way that we can structure our procedures. HubSpot is our CRM. For those that may not know, a CRM is a customer or a client relationship management tool. Excite Capital, we have a community of hundreds of investors. We have a database of thousands of individuals. How do we manage those relationships? If I call John on Monday and we have an outstanding conversation, but he lets me know that, hey, Miles, I'm looking to place capital in Q3, and I'm looking for a Class B property with 15% average annual returns. If I'm not taking notes of that, come Q3, when we have a Class B property, I'm not going to know to reach back out to John. So we use HubSpot as a CRM tool to be able to manage all of the conversations that we have, all the emails, all the text messages that you may have received, even maybe the notification that you received that, hey, we're about to be going live for this Monday monthly meetup. We sent that out through HubSpot. Cash flow portal. This is our secure portal that our investors can use to manage their investments. So on a yearly basis, we send out K1 tax reports. This is where they would get uploaded. This is where they could see, hey, I invested X amount. My investment has yielded Y returns. This is the portal that we use to be able to manage all of our investors' investments. And then when it comes to managing the opportunities, we utilize a lot of tools. A couple that come to my mind is at least AI and Rent Vision. Rent Vision, just to give like a quick update on this is a tool that you can leverage that it does so many things. So let's say you have a marketing budget, and I'm just using this as like a general example. Let's say you had a marketing budget of $500 per month, and part of that marketing budget was to market your one-bedroom apartments. And let's say your one-bedroom apartments were 100% occupied. Essentially, that money that's going out to market this one bedrooms is sort of wasted money. Rent Vision is a tool that we can, it's very latest technology that we can use to see things that maybe like a human may have missed. If there's being money spent to market one bedrooms, but the one bedrooms are already 100% occupied, maybe you can allocate that money to get the 3 bedrooms occupied. Or let's say that it's the winter months, right? And we know that the winter the leasing activity slows down dramatically. Let's say that you had 25 leases expiring in December. Rent Vision is a tool that could say, like, hey, you have X amount of leases expiring in this month. Why don't you, for when they go to renew their lease, do this resident 15 months, this resident 8 months. So it takes it out of that window where you have X amount of leases expiring all at one time. It spreads it over the course of the year. Because I'm just telling y'all, when you're managing these apartments, let's say like a 100-unit deal, you don't want 1 month to have majority of your leases expiring, because all 11 months you're rent positive, you're able to pay your mortgage, and in that 12th month when all your leases expiring, let's say all those residents find a new place, or they have to move, or they're buying a home and they're not renewing their lease, your occupancy is going to take a dramatic decrease based off not being proactive. So as an apartment operator, you always want to have a proactive approach. Yes, you're looking at the weekly key performance indicators, but those weekly KPIs is telling and you can use those weekly KPIs to forecast how your apartment is going to be performing later on. So once again, if you identify a month that has, let's say, 10% or more leases expiring, or maybe it's probably be fair if I did like 15% more per month. Maybe utilize that tool where, like, hey, this lease renewal is going to be 15 months. This lease renewal is going to be 9 months, to get it out that window. Hope that makes sense for everyone. If that doesn't make sense for anything that I covered, drop a question in below and I can definitely expand upon that. But just to summarize, these tools that we see on our screen right now is what took Excite Capital to the next level. Leveraging Rent Vision and other AI technology to be able to be forward-looking, managing the deals, utilizing HubSpot, Cashflow Portal, and Monday.com to have this standard operating procedure and to know that SOP is being properly executed is just second to none. Without these tools that we leverage on a day-to-day basis, we would not be as successful as we have so far. So I hope that y'all are getting some stuff. The presentation is coming to an end, but if I could just, I know I've talked a lot. I know I've crashed my computer 3 or 4 times, but if you could take anything away from this presentation, it's what's on our screen right now. Communication is key. Whether you're communicating with the top broker, or you're communicating with your property manager, or you're communicating with a potential investor, having that transparent communication, it builds trust. Our disciplined underwriting, having conservative assumptions, and then going and doing due diligence and then proving it is a proven technique that Excite Capital has utilized over the last 6 years, and it's been proven to be correct, right? We've been successful because we've remained disciplined. Even when we've had opportunities being awarded to us and then taken away from us. And I'm using a real world example. There's been a couple times that we submitted offers, that offer has been accepted, and for whatever reason, the seller pulled our submitted or accepted offer. Yes, we could have raised our offer price, or we could have been more aggressive when it comes to the time to close, but we remain disciplined, and that has allowed us to not put ourselves in a situation where we are making decisions because we have to, right? You don't ever want to put yourself in a situation that you're forced against the wall and you have to only make this decision. You want to remain disciplined and only take on what you can take down. Having that focus has been second to none. And then last but not least, the relationships matter. If you build genuine relationships with some of the top brokers in the market, you will receive access to some of the best opportunities. Another key takeaway that I want everyone to have: if you're actively pursuing deals, let's stop using Crexy. Let's stop using LoopNet. Those opportunities aren't opportunities. Thousands of people have put their eyes on those deals. So let's use CoStar Power Brokers. Let's identify who's having the most transactions in our target market. Excuse me. And then therefore, let's build relationships with those individuals and their team. What that will do is allow you to have thousands of opportunities to comb through. And I honestly, I can't address that enough. Relationships matter. This is a relationship-based business. You have to build genuine relationships. Okay, I love this picture. So this picture was taken when we were doing a tour. So we acquired this asset. This is Grove Park View. In this picture, we have a few of our investors. We have Dr. Julius Oni, and we have our Chief Growth Officer, Tenny Tolofari. And one reason why I love this picture is because these individual people all came together to be able to buy an institutional grade asset. And I want to say that one more time just so it can really hit home. These individual people. So one of these individuals by themselves could not have been able to buy Grove Park View. But them pulling their resources, them pulling their capital together, what allowed us to be able to acquire an institutional grade asset. If you're interested in joining our priority list on some of the assets that we're going to be bringing to market or some of the things that we're currently working on right now, I definitely encourage you to just tap into what Excite Capital has going on. If you do join the ownership group of Grove Park View or any of our other assets, you'll have early access to any of our future opportunities. For Grove Park View in particular, we're projecting it anywhere conservatively 15 to 18% average annual returns. If you see the team just put on the screen, if you're joining from Click Meetings, learn more about Grove Park View. If anything I've said over the last 30 minutes or so you agree with, I encourage you to just click that Learn More button and schedule a call with one of our team members. Once again, that clear communication. On a monthly basis, we send property updates, and on a quarterly basis, we have a Q&A call. So similar to what we're doing right now, all of our investors who are part of this ownership group can join that call, and they can bring up anything that's concerning them, anything that they appreciate. They can ask any questions that they may have, and it's just a time for us to address them. So I always appreciate those quarterly calls and some of the feedback that we get back from our investors. Early on in the presentation, I mentioned why multifamily. Why is this an asset that you should be considering? Along with the multitudes of benefits, tax savings. For a $100,000 investment, in year one, you could take a paper loss, and I wish I could come on camera because I'm doing the air quotes right now when I say paper loss of $27,000. And I say paper loss because your investment is actually generating quarterly distributions. So your capital is attracting more capital, but on paper, you can utilize depreciation to offset your taxable income. I don't know too many other asset classes that offer that benefit. Stock market doesn't offer that benefit. Bonds don't offer that benefit. Crypto doesn't offer that benefit. Multifamily real estate investing, this asset is superior to a lot of these other ones because it offers that benefit. Not only are you generating income, but you're saving money. It's not about how much money you make, it's about how much money you keep. And with that, I'm gonna just tie it to the Q&A. So if you have a question about Grove Park View, if you have a question about how we find our deals, how we work with our investors, what are some of our target markets, what are we looking for in our next acquisition, I would love to answer any of your questions. I know we have some questions already in the chat that we're going to address here soon. However, yeah, I would love to answer any more that we have. Fella or Alicia or any team member, is there a way that we can populate the questions on the screen? If not, totally fine. I could just read through them.
I'm doing that now.
Okay, perfect. Thank you so much, Fella. And then, hey, for all the people who've joined us so far, thank you so much. I apologize for my network issues. My computer's just overworked, right? Maybe I can. In fact, I don't want to risk crashing out again. I'm here with you all. If y'all can hear my voice, I'm here. Okay. Fella, I'm going to just start answering some of the questions. Let me see how we're doing on time. Yeah, it's 7:04 Eastern. I'm going to start addressing some of the questions. So Carrington, thank you for these questions. It says, are the unit walkthroughs done by a professional appraiser or a contractor or just the team for more of a condition check? Is it very thorough regardless? But I'm curious. Carrington, thank you so much for that question. And to answer it, all of the above. We personally walk all the units. We want to put eyes on our investment. However, we use our property manager and all of their vendors that they use, their professional appraisers and contractors. Well, I should say that their contractors are on site, looking at the roofs, looking at the founding, looking at the siding. They're walking the units as well. For some of our assets, we'll conduct an appraisal as well. So for Grove Park View, the last time it appraised for a little north of $62 million. And once again, we purchased this asset for $49 million. So right then in itself, there's some intrinsic value that we're walking into this opportunity with. But yep, to answer your question, we have a full team on site doing due diligence. Karen submitted, Joe. Let's get Miles a new Mac. I appreciate that, Carrington. Okay, Carrington has another question. How long does the end-to-end process take, especially the screening process? So, Carrington, if you're referring to like on the finding the deal side, it could take anywhere from a couple minutes to screen a deal to maybe 30 or 40 minutes. And the reason why it's maybe not 30 minutes, maybe like 20 minutes or so. Let's say I got sent an opportunity and I see it's in a zip code that's south of the airport in Atlanta. I know just from reviewing so many deals in the Atlanta area, based off what zip code it's in, it might be in a class C or D neighborhood with low, medium household income. An opportunity like that, it could take a couple minutes just to verify it's in a class D area to get it out the way. However, Carrington, let's say I receive an outstanding opportunity in a growing market. The median household income is sufficient. Their school ratings and the crime ratings are where we want them to be. I would send that to one of our team members to underwrite and analyze that opportunity a little further. And just to give you some insight on the whole acquisition process, we get the opportunity, we screen the opportunity, we underwrite the opportunity. We receive feedback from our property manager on what they think they could extract from this asset. We submit our offer. If our offer is accepted, we'll do a best and final round. This is an opportunity for us to submit our best and final offer price. If the seller accepts it, then that's when we would do the due diligence to go along with your first question, Carrington. But thank you so much. Okay, Phil, I see your question, but I think that's just a copy from Carrington's. The next one is from L, and it says, "What's been the historical returns, IRR, internal rate of return on your previous 3 deals?" So, and then, yeah, okay, we got it on the screen right now. So when it comes to our previous 3 deals, we're currently managing them, but for the deal that we purchased it, we executed our business plan, and then we sold it. So we went full cycle, or we exited it, that deal. We achieved and this is an average annual return, not an IRR. I can't think of what the IRR was for the view at St. Andrews, but we were projecting a 18% average annual return. We achieved a 29% average annual return. Trying to think. Our cash on cash return was in line. So we projected a 7%. We achieved a 7.1% cash on cash return. However, I cannot recall off the top of my head what the IRR was. However, we exceeded what we were projecting. Thank you so much, Elle, for that question. Okay. All right. Hey, if you're joining us from YouTube, if you're joining us from LinkedIn, feel free to drop a question in the chat. Also, if you do us a favor, just like this live stream. That's just going to help us with the algorithm, getting in front of more people who are interested in these type of opportunities. I definitely appreciate anyone who supports Excite Capital. Thank you so much all for joining. As of now, I don't see any other questions in the chat. But I'm still here, y'all. I know I'm off camera, but I'm still here with us, answering any questions that you may have. Hey, team, do we have any questions on LinkedIn? Any questions on YouTube? Okay. L asked another question. What are the management fees charged by Excite Capital? L, I don't have our underwriting right now, or I could tell you, I could read off all of them. I know they're typically 1 to 3%. And then if Leslie or Tenny's on the call, maybe they can drop it in the chat. Yeah, I don't know off the 10. I'm giving you a range because depending on the deal size, yeah, depending on the deal size, the fee could vary. So yeah, I apologize. I wish I had a direct answer for you. But hey, L, what I'll do is I could give you after this presentation, I'll go look to see what Grove Park Views fees are, and then I can provide that for you. And then once again, each one of our deals is a standalone deal. So the fees for Grove Park View might not be the same fees for Land Bank Lofts or 101 Elwood or Ascend at Stone Mountain. So yeah, but I will give you that range for what we charge. Great question. Thank you so much. Okay. All right. Let me see if we have any other questions. I'm scrolling that chat right now to see if we missed anything. Once again, hey, if y'all are sticking with us all the way here, thank you so much for your time. I know you could be doing anything right now. The fact that you're listening to my voice, going through that presentation, I appreciate you. If you're looking to connect, maybe you have something that, like a personal question, I definitely encourage you to set up a one-on-one call with myself or someone on our investor relationship team. We would definitely love to address any thing that you have. And then we're working on a few exciting opportunities right now. We definitely can't wait to bring one of them to market. So I know we talked about due diligence earlier on in the presentation. Half of the Excite Capital investment team is actually on site conducting due diligence right now for an opportunity. So once again, the due diligence process is one of my favorites because it allows a lot of our team members to meet up in person, to rub elbows and to make sure what we're projecting comes to fruition. So if you're interested in booking a one-on-one call with one of the founders of Excite Capital, and this is an opportunity for you to meet someone who is an expert in this industry, who has years of knowledge. Yeah, book now. I would definitely love to see all your questions get answered. Dr. Julius Oni, Leslie Awasom, Tenny Tolofari, the founders of Excite Capital, they've done an outstanding job over the last 6 years building this community up and bringing only the best opportunities to our community. Okay, I'm going to give it a few more minutes. I don't see any other questions in the chat right now. I don't think there's any questions on LinkedIn or YouTube as of right now. But thank you so much once again for joining us. Every first Monday of the month, we have an Excite monthly multifamily meetup. Every Thursday on a weekly basis, it may go to bi-weekly, but as of now on a weekly basis, every Thursday we'll have a Beyond the 9 to 5 webinar. So this is an opportunity for, once again, to answer any questions that the community may have. So Excite Capital, we are out and about. Our goal is to be omnipresent. We want to be on LinkedIn. We want to be on YouTube. We want to be in the faces of all of our investors, transparently letting you know what all we have going on. So I definitely appreciate everyone sticking to the end. Fella, I don't see any other questions coming in. Do you mind running the exit video?
Wake up early, catch the morning train. Same routine playing like a broken refrain. Monday to Friday, clock just ticks away. Years are passing while my dreams fade away. 9 to 5, eating up my life. 9 to 5, cutting like a knife. But I refuse to let it be my story. I'm turning pain into glory. Started learning, staying after hours, becoming wise, gaining hidden powers. Every meeting became my classroom, yeah. Every challenge showed me who I am. over. Now I wear the crown. Experience became my greatest tool. Now I'm teaching others all these rules. 9 to 5, transform my life. 9 to 5, cutting like a knife. But I refuse to let it be my story. I'm turning pain into glory. 9 to 5, eating up my life. 9 to 5, cutting like a knife. But I refuse to let it be my story. I'm turning pain into glory. Started learning, staying after hours, becoming wise, gaining hidden powers. But I refuse to let it be my story. I'm turning pain into glory. Started learning to glory. Started learning to glory. Started learning to glory. Started learning, stay learning, it came my town. Me gone, leaving it behind. But I'm 9 to 5. Beyond, beyond, beyond the grind. Beyond, beyond, leaving it behind. But I'm 9 to 5.